Hello Ponrayu, my name is Irochan Tamil Arasu. My matrix number is 06DAT23F1102. We are going to present about 5 cases.
Before we move to our presentation, let me introduce my teammates, which is Nandisri, Dhiran, Mithika, myself, and Mohammad Shafiq.
This is Muhammad Shafiq Ifamir Halim. My matrix number is 06DAT23F1069. And I will present to you about the case study that the case number one that be given by Puan Dr. Nur Yasmin. Uh, and I will present to you about the question that be given. The first question that be given by my fellow teacher is describe the ethics problem based on the case that be given to me. The case number one for the case number one, the is that is the looking at is working discrimination that's through sexist remarks, the sexist remarks and bias against a woman, balancing works and caregiving. The second point I will present to you is a lack of respect, that how the by demeaning the meaning and undermining college instead of supporting her, lack of a fairness because the employee is being unfairly treated and charged for her personal situation rather than her work performance. Next question to be given is we must to identify the affected parties based on the case. For the case one, we we find that the problem is for the affected parties. Some of the affected parties is the junior female staff members. The, they face distress, discrimination, and reduced morale due to excessive remarks and lack of support. MIA by laws expect the fairness and respect toward college, upholding the professional behavior. The one is affected parties actually is other college that experience increase in workload and low morale due to tension and unfair treatment. So management must maintain objectivity and ensure a fair work distribution. The next point is the manager has a duty. The manager has a duty to act ethically and manage conflict fairly. Uh, for this case, maybe he failed to act breaches the care, uh, and maybe expect to promote the ethical culture and comply with the MIA leadership responsibility and principles. Then the last point for this question actually is the firm or the organization is risk reputational image and potential legal consequences for discrimination under MIA. Under MIA, firms must maintain high ethical and professional standard. Uh, the next question is explore the optional solution. For this case, I get the information that we in the other optional solution that we give in is a formal medication and counseling. This to encourage the understanding and accountability. Next is a mentorship and a peer support. It's going to build empathy and inclusion. The next point is a workplace ethics training. Is to prevent future unethical conduct. Uh, Next point is to review human resource policies to strengthen organization safeguard, and lastly, flexible work arrangement is to promote the fairness and support. The next question is evaluate each possible solution. My first point is address the harassment immediately, integrity, and professional behavior. Maybe the firm must take disciplinary action against the male college for discriminatory comments. This upholds integrity and set a professional tone. The next point is support the female employer. Objectivity and due care provide the flexible working arrangement or adjusted schedules. Demonstrate care for staff and staff welfare and ensure fairness. The next point is ensure fairness in workload. Its objectivity, review team duties to maintain fairness without bias and promote equitable treatment. And last, my point for this question actually promote ethical culture through training. It's professional behavior, integrity, conduct, diversity, and respect training to prevent the future misconduct and reinforce ethical culture. The next point is select and justify the best solution. The best solution is to promote to ethical culture through the training. The best solution is for the organization or the firm to make in the future the employee may be respect is others employee, especially is a woman's other all the employees or the senior employees. Justification, I just want to say that this solution follows the MIA fundamental principles of integrity, objectivity, and professional behavior, ensuring honesty and accountability. Fundamental principle that feature more prominently for safeguarding. Uh, this question actually based by MIA bylaws that and the point that I will get it is have four actually. That is integrity, objectivity, professional behavior, professional competence, and due care. For integrity, is to ensure honesty, fairness, and moral uprightness in addressing discrimination. For objectivity, is to prevent bias and promote fair evidence-based decision. The next one is professional behavior. Is to maintain respect, compliance with the ethical standard, and professional reputation. And lastly, professional competence and due care. Ensure responsible, informed, and empathetic handling of the staff welfare and conflict resolution. The next is a key consideration in resolving in the dilemma. Uh, Actually, I just only get 4 points for this one. I just got find 4 points for this one. Actually, it's identify threat to compliance, apply the fundamental principle of ethics, take appropriate fair corrective action, and lastly, strengthens workplace safeguard to uphold the respect, equality, and professionalism. And lastly, is the course of action to resolve the dilemma. For the reminder, all of this question is based by MIA by laws. The 4 point that I just got the 4 point for today actually is act immediately and fairly against a misconduct, provide support and respect to the affected staff, ensure transparency, fairness, and guardians from relevant authorities, and lastly, establish long-term safeguard and etiquette awareness. For the next case, I will give it to you to my friends, Dhiravash.
Hi madam, my name is Dhiran and my matric number is 06D8023F1023. Today I'm going to present about case 2. Okay, now I'm going to describe about the ethical problem. So the ethical first problem is integrity. What is integrity? Integrity is filing to record all transactions truthfully result in misleading financial statement. And the second one is objectivity. Objectivity is close relationship with the directors and staff create a familiarity trait in impairing independence. And the third one is professional competence and due care. The accountant must ensure that financial information is properly recorded and reported. Okay, now I'm going to identify the affected parties. The first one is the accountant an accounting firm is reputation and compliance with MIA bylaws at risk if unethical behavior is ignored. And the second one is the client company directors and staff may may face and legal penalties for unrecorded sales and misuse of company assets. And the third one is regulatory authorities. For example, is LHDN and SSM. So the elaboration is receive inaccurate information affecting regulatory compliance. The fourth one is stakeholders. For example, is investors and creditors and employees. That is, misleading accounts may affect their decision and trust in the company. Okay, now I'm going to explore about optional solutions. The first one is discuss the issue with management and highlight the ethical and legal implications of unrecorded sales. That is, encourage transparency and give management a chance to act. The second one is formally report the issue in writing and request that all transactions be properly recorded. That is, upholds integrity, objectivity, and professional behavior under MIA bylaws. The last one is if management refuses to correct the issue, withdraw from the engagement and consider reporting to authorities if legal required. That is, maintains independence, integrity, and compliance with law. Okay, now I'm going to evaluate each possible solutions. The first one is ignore the issue, that is, branches integrity and professional behavior, unethical and damage reputation. The second one is discuss informally with directors, that is, shows objectivity but weak action may not fix the problem. The last one is formally report to the management. The elaboration is upholds integrity and due care, ensures accurate records and proper actions. Okay, now I'm going to select and justify the best solution. The first one is formally report the issue to management and request correction of all unrecorded staff sales to ensure transparency and accuracy. The second one is withdraw from the engagement if management refuses to act to maintain integrity and objectivity under MIA bylaws. The third one is the action upholds professional behavior and due care, ensuring compliance with ethical standards and protecting the accountant's professional reputation. Thank you. Okay, now I'm going to present about the fundamental principle that feature more prominently for safeguarding. The first one is integrity. That is, all financial transactions must be recorded truthfully, concealing sales branches honesty. The second one is objectivity. Objectivity is close relationship with directors and staff create a familiarity trait that must be managed. The third one is professional competence and due care. That is, the accountant must act diligently to ensure records are accurate. The last one is professional behavior. Professional behavior must comply with laws and MIA bylaws and avoid conduct that discredits the profession. Now I am going to present about the key considerations in resolving the dilemma. There are few points I'm going to say. The first one is the seriousness of the ethical branch, that is unrecorded transaction. The second one is the need to maintain independence and avoid conflicts of interest. The third one is the importance of accurate financial reporting and legal compliance. The fourth one is the professional duty to act in the public interest and uphold MIA ethical standards. The last one is possible consequences for the accountant, client, and stakeholders if the issue is ignored. Okay, course of action to resolve the dilemma. Firstly, discuss the issue formally with management and request that all staff sales be recorded properly. Second one is advise management on the ethical and legal implication of unrecorded transactions. The third one is document all discussions and actions taken for professional protection. The fourth one is if management refuse to act, withdraw from the engagement to maintain integrity and objectivity. Thank you.
Hello, madam. My name is Mitika Napapa Shanmugam. My matrix number is 06D8023F1017, and I'm going to talk about case 3. I'm going to describe about ethical problems based on the case 3. The first one is threat of self-interest. Company A still owes 25,000 ringgit from prior year after the firm permitted them to postpone paying the 50,000 ringgit audit fees over a 10-month period. In addition to causing financial reliance, this could compromise impartiality and independence. The second one is about advocacy threat. The partner may have compromised professional judgment and integrity by promising to have the audited financial accounts complete in time to assist Company A in obtaining a bank overdraft extension. The third one is self-review threat. The partner infringed the principle of professional competence and due care by failing to evaluate the audit plan prior to the commencement of work. Now I'm going to identify the affected parties based on the case 3. The first one is the audit firm and partners. The risk of facing disciplinary action for abusing their independence and ethics. The second one is Company A, client, may receive a biased or unreliable audit report. The third one is Company A's bank, determines loan choice based on audited financial statement. The last one is the public and regulatory organizations. The public's confidence in the accounting industry may be weakened. Now I'm going to talk about optional solution. The first one is after putting precaution in place, continue with the audit. Ensure audit and tax services are performed by separate teams. The second one is hold off on signing the audit report until all fees have been paid. Give the client time to settle payment before completing the engagement. The third one is step down from the audit engagement. If Company A cannot settle fees and independence debts cannot be initiated, withdraw from the engagement. The last one is continue the audit without taking any precautions. Continue audit and sign report even though 25,000 ringgit remains unpaid and no safeguards are applied. Now I'm going to tell about solution for the case. The first solution is proceed with audit but ensure full settlement of overdue fees before signing the audit report. Reduce financial dependency and restore independence aligned with MIA bylaws. The second one is withdraw from the engagement due to ethical threats. Guarantee complete adherence to independent and professional integrity. The third one is assign another partner to review the audit. Retains autonomy while carrying on with more stringent supervision, shows due care and professional conduct. Now I'm going to select and justify the best solution. Proceed with audit but ensure full settlement of overdue fees before signing audit report. It offers the client professional service while maintaining the firm's objectivity and integrity. Before signing the audit report, the partner ought to demand payment of all unpaid fees. Assign an impartial partner to examine the audit strategy and findings. The last one is all safety precautions and ethical evaluations should be recorded in the audit file. I'm going to justify the solution for the case 3. Fundamental principle that feature more prominently for safeguarding. integrity, objectivity, professional competence, and due care, confidentially, professional behavior. There are 5 fundamental principles. The first one, integrity. When discussing price agreements and term of payment with company A, be truthful and open. Second is objectivity. Steer clear of prejudice and undue influence brought on by unpaid bills and intimate client relationship. Third one is professional competence and due care. Despite workload pressure, make sure audits are properly planned, reviewed, and supervised. The fourth one is confidentially. When discussing important matters internally, keep all customer financial information confidential. The fifth one is professional behavior. Adhere to the MIA bylaws and refrain from any actions that bring the profession into disrepute. And I'm going to explain about the key consideration in resolving the dilemma. The firm's financial reliance on Company A posed a self-interest threat due to the overdue audit fees ringgit. Offering the same client both audit and tax services could undermine objectivity. Adhere to the auditing standards and MIA bylaws. Steer clear of any action such as signing a report before independence is guaranteed that could discredit the firm on profession. There could be an advocacy threat if you help the customer get a bank loan. Refrain from being swayed by the client banking deadline or financial struggles. Now, the last one, I'm going to explain about course of action to resolve the dilemma. Designate a different partner to conduct an independent review of the going concern assessment audit file. Carefully assess the cash flow problems and financial status of Company A. Make sure audit and tax compliance tasks are handled by separate teams. Before beginning the audit, report the situation internally and get advice or approval. Before making an option, gather enough audit evidence. That's all for case 3. Thank you.
Hi madam, my name is Eroshin Tamilarasu. My matrix number is 06DAT23F1102. I am going to present case 4. Describe the ethical problem. The first ethical problem is bribery and corruption. The audit identified large unidentified payments made to individuals linked to overseas government departments during the period when the subsidiary won substantial overseas contracts. The second one is lack of transparency and misrepresentation. The finance director instructed purchase orders that could not be cross-referenced to approved suppliers, yet they were included in the payable ledger. The last one is manipulation of financial statement. Financial statement. The finance director instructed staff to classify penalty charges as cost of sales instead of disclosing them properly as penalties. Identify the affected parties. Finance director and company management. Directly involved in unethical and illegal actions like unauthorized payment, hiding penalties could face disciplinary action, job loss, or legal charges. The second one is subsidiary company. Faces legal and financial consequences due to bribery, fraud, and environmental law breaches, could admit risk of loss of reputation and trust among stakeholders, investors, and the public. The last one is that the shareholders and investors affected by potential loss of company value and reduced trust in management integrity, cause misleading financial reports may cause wrong investment decision. Explore optional solutions. Immediate actions preserve evidence and limit further risk to secure electronic and paper records. It prevents destruction of evidence, limits further suspicious payment. The second one is investigation and evidence gathering. Engage a forensic specialist to trace payments, identify beneficial owners of payers, map timeline of birds or contracts, and tested related party links to officials. The last one is governance, legal, and regulatory options. Notify regulators and law enforcement if evidence support bribery, corruption, or public sector link. Determine statutory reporting requirements and notify regulatory like an local anti-corruption authority, securities regulator, and environmental regulator. Evaluate each solution. Resign from the audit engagement If the auditor independence or ethical principle are compromised, resignation may be the last resort. The second one is report the unethical activities to the higher management. Necessary if the management fails to act or conceal the issues. This fulfills the auditor's legal and ethical responsibility. The last one is modify or qualify the audit opinion. The auditor may issue a qualify or adverse opinion due to material misstatement and non-compliance. Select and justify best solution. The best solution is escalate the matter to those charged with governance, obtain further evidence, and report the appropriately with possible modification of the audit opinion. The justification is reporting directly to the audit committee or board of directors maintains independence and avoids conflict of interest. It allows those charged with governance to initiate an internal investigation or correction measures. Transparency is crucial to protect the auditor's credibility and the public interest. Fundamental principles that feature more prominently for safeguarding. Number one is integrity. The auditor must refuse to associate with any false or misleading information and report unethical conduct appropriately. Number two is objectivity. Maintain professional independence, seek advice from senior partners or the audit committee, and document all decisions clearly to avoid being influenced. Number three is professional behavior. Follow ethical reporting requirements, refuse unethical instruction, and report violation through proper channels. Number four is confidentiality. Ensure disclosure is made only to appreciate authorities and document all justification for doing so. Key consideration in resolving the dilemma. Recognize that the case involves bribery, falsification of financial records, and environmental law violation. Collect supporting document, audit evidence, and communication related to the unidentified payment and conceal penalties. Evaluate the auditor's legal duty to report fraud, bribery, or environmental breaches. Discuss the situation with senior audit partners, ethics committees, or legal advisor before taking action. Avoid any action that could mislead users of financial statements or damage public trust. And the last one is course of action to resolve the dilemma. Engage a forensic specialist to trace payments, identify beneficial owners of payers, map timeline of birth contracts, and test related party links to official. Keep a detailed record of all meetings, discussion, evidence, and professional judgments. Manipulation of financial records by misclassifying environmental penalties as cause of sales. Perform extended audit procedures to verify like nature and receipts of the unidentified payments. The last one is strengthen internal controls over procurement, payments, and environmental complaints.
Hi madam, my name is Nandisri Sankaralingam. My matrix number is 06D8023F1011. Describe the ethical problem. There is a conflict of interest because the accountant worked closely with the regional director who requested the report, but as a professional, the accountant must remain independent and report accurate findings to the company's board, even if it may upset the director. The second ethical issue is the risk of mispresentation. The regional director informed the finance director that the project would only cost 4 to 5 million extra and face a short delay, but the accountant's investigation found the real cost to be between 7 to 10 million. Giving false information can mislead the board and harm the company's decisions. The third ethical problem is a threat to integrity. The accountant might face pressure from the regional director or management to hide or delay the true results of the report to protect their image or the company's reputation. However, according to MIA ethical principle, The accountant must act with honesty and fairness in all professional duties. Identify the affected parties. The first affected party is the accountant, who must stay professional and ethical while completing the report. Although the regional director may pressure the accountant to hide or soften the truth, the accountant's main duty is to report accurate findings to the board and maintain integrity according to MIA's fundamental principles. The second affected party is the regional director, who knowingly share wrong cost estimates and shorter delay times. This action creates an ethical issues and may damage their professional reputation when the true findings are revealed. It also puts the accountant in a difficult position between honesty and royalty. The third affected party is the company's board and shareholders, who depend on the accountant's report to plan strategies and manage finance. If the information provided is false or incomplete, it could lead to wrong decisions, financial loss, and loss of trust in both management and the accounting firm. Explore optional solutions. The first option is to follow the regional director's instruction and report lower figures. This may help maintain a good relationship with the director, but it is unethical because it misleads the board and goes against professional integrity. The second option is to delay submitting the report until after the board meeting. This may help avoid immediate conflict, but it shows poor professionalism and may cause wrong business decisions since the board will not have accurate information in time. The third option is to complete and submit the report with the correct cost and delay figures. This is the most ethical choice as it maintains honesty, integrity, and professionalism, even though it may upset the regional director. Evaluate each solutions. The first solution is for the accountant to complete and submit the report truthfully, showing the real findings about the cost increase and project delay. This follows the principle of integrity and objectivity. Although it might upset the regional director, it ensures honesty and transparency, which protects the accountant's reputation and the firm's credibility. The second solution is to delay the report so the regional director has time to manage the problem first. This may seem considerate, but it is unethical because it hides important information from the board and misleads decision making. It breaks integrity and professional behavior principle under the MIA Code of Ethics. The third option is to adjust or soften the number in the report to match what the regional director said. However, this clearly violates ethical standards as it involves dishonesty and misrepresentation. It can lead to serious consequences for the accountant, the firm, and the company if it discovered. The best solution is to report the findings honestly to the board. As a professional accountant, it is the accountant's duty to uphold the principle of integrity, objectivity, and professional behavior under the MIA Code of Ethics. By providing the true cost and estimate timeline, the accountant helps the board make correct financial decisions and maintain the firm's credibility. Although this action may cause conflict with the regional director, it ensures transparency, protect the public interest, and avoid any long-term professional or legal consequence. This solution is justified because it aligns with the MIA fundamental principle. The accountant must always act with honesty, remain objectivity without bias, and behave professionally even under pressure. Telling the truth will trust and uphold the reputation of both the accountant and the accounting firm. Fundamental principles that feature more prominently for safeguarding. First, integrity is very important because the accountant must not hide or change the truth about the project cost and delay. Second, objectivity is also crucial as the accountant should stay neutral, and not follow the regional director's misleading figures. Third, professional competence and due care mean doing the work properly with skill and care. And lastly, professional behavior ensures that the accountant's action protect the image of the accounting professionals. Key consideration in resolving the dilemma. First, the accountant should focus on honesty and accuracy when reporting the project's real situation. Second, they must not let personal relationship or pressure from the regional director affect their judgment. At the same time, they should handle confidential information carefully while ensuring the board gets the truth. And the last will be the accountant should think about how their report will affect the company's image and financial stability. Course of action to resolve the dilemma. The accountant should complete and submit the report truthfully to the board showing the correct figures of delay and extra costs. They should communicate clearly with the finance director and avoid giving any false estimates. It is also important to explain to the regional director that as a professional accountant, ethics require honesty and transparency. By following the MIA Code of Ethics and documenting all actions, the accountant can protect both their integrity and the public trust. All from our group. Thank you.